Good morning, traders. Paul here with GammaEdge. Today is Friday, the 27th of May. We are heading into a 3-day weekend. Hallelujah. Here's the fine print. We ask that everyone take the time to read this, acknowledge it. It's important to you, it's important to us. Starting with the market model. A couple key things happened yesterday that I think are noteworthy. First of all, you can see across the top here the 52-week new high, new lows. We are improving in the breadth, so more stocks are starting to come off of their 52-week new lows, and we're starting to see kind of a parity. What we want to see is the green go above the red. We want to see the yellow line, which is the net between the two, go positive. We're not there yet, but we're getting there. This is a trend that we need to see for a longer term bull. We're on the right path. The second trace here is the filtered cumulative tick. Why this is significant, this shows the large sweep order institutional buying, and we saw really out of the gate yesterday and all the way into the close, just accumulation. So this is the first time we've seen this type of behavior without some intraday selling, especially around the euro close. We have the view that this is constructive to the upside, and we want to continue to watch that. This third one is the unfiltered version of this, and it has a characteristic which at GammaEdge we call linear up. This is the cumulative tick. Basically, it's measuring not size of the trades, but the occurrences of trades, and they're all ending on the uptick, which means that people are buying, and we use this as a primary input to our overall model. We did get the continuation that we were expecting right out of the gun yesterday, and we have on the short term what we call railroad tracks. We are watching for a continuation pattern. We do note, as I said at the open, this is a 3-day weekend. We may see risk off, but let's see what the magnitude is, and let's watch the instantaneous cumulative tick right here. Let's watch for that to close into these really short-term moving averages that we see here. Overall, improving, bullish, not out of the woods yet. We're still in a longer-term downtrend. Time frame matters here, so we've got to work pretty hard now to get into a sustained structure. The overall index condition, 3 of the 4 are shown very, very positive. The SPX are showing a net negative reduction in the negative cumulative GEX, gamma exposure, and we're seeing a significant increase in the positive gamma exposure on the cumulative side for the SPX. The SPY, a very, very large change compared to the previous day. Same thing on the Qs, large change compared to the previous day. IWM still bucking the trend. We did see a reduction in net negative, and we also saw a reduction, minor, because there's just been no call demand for the small caps. We did see a net reduction on the call side, so be aware of that. Not everybody is playing the game right now. Near-term expiries, I've highlighted where we are and kind of where we're sitting. Key takeaway compared to previous days, net positive expiry today. This is fairly significant as these calls, which are in the money to the left, so the moneyness exists to the left, they could get monetized. And this is especially true for the SPX, the Qs, and the IWM, because as those are monetized, that will actually cause the dealers to sell. So when we close calls on the trader side, the dealer side is to sell the underlying, and we may have that occur here in the structure. Key thing here for IWM, even though it was bucking the trend, we're right at this major level. We'll want to watch that, and it's going to flip the moneyness. You can see 300 is a key level for the Qs. We have a ways to go, 410 for the SPY and 4100 for the upside, but we're already in a very dominant area here at 4050 coming off, so we may see a very large amount here. Also tend to pull us down. Watch these key levels as we go forward. Taking a look at the gamma history, I did take some time to expand on this. I'm not going to read it to you. Pause your player and read this. The key takeaways are when you see a tightening of positive GEX come into the price like this, folks are nervous. They're wanting to take advantage of the short-term bursts upward, and we had positive GEX which is positive gamma exposure, which is a short-term call exposure, really mirroring, as you can see, price action here. So any move up is resulting in a monetization, and these folks either rolling or doing whatever they're doing. So watch this. We are improving on the Qs. Note that it's not all, no roses to the upside here. We did see some major changes in IWM here, but note it's kind of the tale of two tapes. We have the plus GEX coming down, which indicates people want to participate in a move up in the IWM structure, but we also had a drop in the zero. When we drop the zero in any of these complexes, we're adding puts. And so we have kind of two things going on here. Flow summary, the red arrows tell you pretty much what you need to know. Across the top is within 30 days, so these are calculated with the expiries that are in the next 30-day window, which obviously includes the June expiry. And then beyond June, or beyond the next 30 days, are here. And you can see we're actually seeing puts being added across the board. This is a change from where we've been earlier in the week. We're actually seeing calls added out beyond 30 days, and now we're starting to see kind of the inverse. So we want to watch that. Again, read the commentary that we added here. Major thing to look at here, we have moved up into the zeros. I've talked about the zeros. Read this, pause your player, read this. We have now, with a closing of the SPX up in this area, we've had a drop of one of the short-term gamma zeros. The complex zeros that we have here, our thesis is that we've got to push above them to have any chance of sustained upside. And the fact is, we're starting to see that. We're continuing to drop the zeros, which is good. That's constructive. To the extent that spot price is able to push above that. So pay attention to this. We did have a stabilization in one of the delta zeros, which is a big deal, because what this is showing, as these start pulling upward, spot price will be going up, and this is all indicative of calls being added to the SPX complex. And so we're starting to see some things occur here, which we see as constructive to the bulls. Looking at the 0 DTE, first thing is the circle 1 here shows it. I'm only looking at one date. Positive expiry today, a fairly significant level, positive level here. The range for today, the expected move, 3%, open, high, low, close. This is not a close to close. It's important for you to understand that. So we're looking at intraday movements. This is especially important if you are to put on a condor or something that's sell some premium outside the ranges. You probably want to be outside these ranges. Keying in on that a little bit, you can see here that we've got here at circle 4, 4100 is a big line in the sand. It is a major expiry for the call open interest for today. It is the positive GEX expiry. So removal of this line will potentially open the door to moving higher. If we do break through this line, I would look at 4125 as the next area, the target area for the end of the day today, and possibly sitting up in here. There's not a lot of pressure up there, and you'll see why here in a little bit. To the downside, we've got a transition zone here, very noisy, not a lot of dominance in here, not very clear, so not seeing the 0 DTE really play a major role into the close. To the downside, 39.50 as the expiry is possible, but note we've got all these positive deltas now that are sitting down here. So we've been closing a lot of puts, resulting in net negative or net positive deltas developing. Still have some negative gammas here, but the magnitudes are getting smaller and smaller as we go forward. Looking at the combo, which is the AM and PM settled part of the complex. A lot of information here. I'll try to get through it quickly. Net negative, still very negative, but smaller or less negative than yesterday. And this has been the trend all week. We've been closing those puts, especially as we march upward. Gamma is a short-term phenomena, so as we move up away from the puts, this number is going to get less and less. Big key takeaway here that I want you to realize is that we need these to flip positive to get into a positive gamma environment in the SPX. Taking a look here, circle 3 is outside the expected move, but certainly could do that, could push into that. The shaded area here is where we have those zeros that I was talking about on the previous slide. And note we're in this area, this transition area for the zeros. It's fairly wide, but we have a number of transition points in there. We need to blow through this and stay above it to have any chance of having a long-term bull. If we fail in this area, we're coming back down. Where would we come down to? Right now, the natural area is 4,000. We have COI here. This is the call open interest. Put open interest here over at the same level. So you can see the relative magnitudes. And then to the downside, you can see where the expected move could potentially take us. We don't think we're going to hit these quarter and half levels all the way coming down, but anything is possible. Taking a look at the expiration, this is what's expiring for the next month. You can see the net positive expiry today. We also had a couple transitions occur next week. You can see we're now starting to grow. So we come back off of the Monday into the Tuesday. Tuesday's expiry is net negative gamma right now. Wednesday is positive, Thursday is a nothing muffin, and then Friday is whatever it is. And you can see we're starting to see some development across here. Net positive change here, so we went from I think 109 or 111,000 negative yesterday to 82. So we're actually seeing a significant reduction in the puts with the addition of calls now for the June expiry. The SPX structure is still very broken. The transition is wide, it's fat. We're seeing a net reduction though in the negative. This was an inverted structure that I was complaining about yesterday. I note the JPM short leg that is sitting out here. That'll be a big deal as we get closer, and I'll explain that in a separate video. The key things here is we're sitting right here. We've moved right up to the bottom of this transition. A lot of calls sitting above us. It'll be interesting to see how we play through this. Some key levels to keep in mind here as we move forward. So what's the summary? Market model longer term, we're still bearish. Remember those downward sloping ribbon. But as we move through that, that's going to start pulling that up and we'll see a convergence. So that'll be one of the key things that'll need to occur to have any confidence in going long for any length in time, swing trading or position trading. Shorter term, need to push through that ribbon with sustained continuation pattern. We are looking for a continuation at the open today, not a reversal. We think that'll be fairly important. And if we don't get that, that could be a significant reset into next week. SPX 4060, which is where we are right now, all the way up to 4190 is the zero complex. I talked about that. We need to get through that shaded region that I discussed. We're into a 3-day weekend. Watch for risk off into the close. A lot of headline out there. We could potentially pull back and then reset into next week. We'll just have to see. The longer term structure of the SPX is still inverted. I talked about this yesterday, but it is improving to the long side. The ITM puts are being reduced, monetized, however you want to look at it. And this is pulling us upward. And then as calls are added to the upside, this will also pull us upward. So that's it for today. Come and join us at GammaEdge.us. This will take you to a sign-up page to get you into our Discord. We've got all these tools turned on, a lot of visualization tools. You can learn about this stuff and the market model and how to apply it to your trading. A lot of educational stuff there. Follow us on Twitter, please, at GammaEdges with an S. And then here on YouTube, of course, bookmark us, like us, and subscribe so that next time we post something, you can get notified. Have a great 3-day weekend. Hope to see you in the Discord, and we'll be posting some stuff probably over the weekend, some things that we're seeing, and look forward to taking a couple of days off here and just chilling. So enjoy, everyone. Thanks for the support, and we'll see you in the Discord.